Talk to us a little bit about the rental market. I mean, you're obviously very bullish that prices are going to increase a lot. I am too. I agree with you. I think right up until the mid 2040s, we've got a really good trend, and that's a long ways out, but I think it's going to last for a while. What about rents, though?
Yeah, I mean, I think A, consumer preferences will continue to push rents up, and then B, the fact that we have no other alternative but to rent, right? And
Hmm.
so consumer preferences, when I talk about that, it's really the idea that a lot of consumers like the freedom that came after the hybrid remote work environment of the pandemic. And so a
Yep.
lot of people are moving around in a lot quicker of a clip and moving from city to city. I mean, I'm exactly an example of that. I've been in New York. I technically was based out of San Francisco, even though I was in New York, and then I was in Dallas for a stint, and now I'm in DC. It really comes with a lack of need to plant yourself because you don't
Hmm.
have a property. And so consumer preference will continue to push the narrative that rents will continue to go up because demand will increase not only from locals in the area, but from people coming in, even if for a brief stint. Now, the
Right.
second one really comes down to the fact that there is no other alternative. You can't go out and purchase an asset because you've been priced out of the market. And it's gotten to a point now where not only what does it mean when people are priced out of the market, it's when a lender truly will not give a loan to you because your salary does not meet the certain debt to income ratio necessary to purchase a home in X, Y, and Z strike price range. And so, really, those two things I do think are going to contribute even more to
Hmm.
increases in rents over the near to midterm, if not long term. But I
Yeah.
do completely agree with you in the sense that rents are going to continue and they're going to continue to go up. I do think some of the markets we saw a slight dip coming out of 2020, 2021 as interest rates increased because of the development issues that flooded the market, some
Yep.
markets with supply. But right
Yep.
now, we're starting to see it back on an upward trajectory as they got hit in the period of 8% plus interest rates.
I'm really glad you brought that up because we had last year an absolute mega record number of apartment deliveries hitting the market. And, even though those aren't single family homes, given the right price, yeah, of course, everybody would prefer a single family home usually. They'll take an apartment because the deal is just too good to resist. And these institutional apartment owners have been cutting deals left and right. And finally, we're just now starting to see that supply getting absorbed. And I think the rental market is going to take quite a quick turn. A lot of investors right now are complaining, the cost of everything's going up, namely insurance. And you're going to be able to pass that through to your tenant very soon. So just sit tight. I know the rents have been, kind of boring lately as prices have, they're going up, but it's just a very modest amount. And I think that you're going to see that rent equation and that sales price equation turn very quickly, especially, I mean, we're now in 8 straight weeks, I think, of mortgage declines in mortgage rate declines. And if those mortgages hit into the mid fives, the market is going to explode. I mean, barring some external massive recession or something, but that's a strike price that people aren't going to be able to resist at 5.5% mortgages. Do you think we'll get there?
I think we might. I think it will have to do less so about the Fed fund rates going down and more so about consumer speculation as it relates to the 10-year. But I do think we might get there. I think analysts right now are projecting it out for end of 2026 is when we'll achieve kind of that 5 to 5.5 range.
Mm-hmm.
Now, I don't think anyone foresaw anything that was going to happen with the Trump administration. And so
Yeah.
I'd be very curious to look back at those analyst estimates now, because obviously, if we do have runaway inflation, it obviously creates less of a narrative for the Fed to cut the interest rate. But at the same time, if people continue to push that 10-year down, it's going to come to a point that it might tip that way even without the Fed adopting a different measure. And so it'll be an interesting one to pursue. And I like what you had said earlier, too, about the institutional investment into multifamily. And it really was a strong couple of years there for multifamily and the residential sector space. Because if you think about all the other commercial asset classes that were out there, when free money came in overabundance, they started dumping into whatever bucket made a ton of sense, not to mention they were
Yeah.
under deployment horizons that were fixed of about a year. And so if you think about the asset classes that
What
made
does that mean
sense.
under deployment horizons? What does that mean?
Yeah, so with a kind of fund horizon, right? A 5 to 7 year fund horizon. You've got to deploy over a 12 to 18 month interval, right? And
Got
so
it.
you've got to deploy out of it and you've got to find deals that are naturally with it, or else those funds are just kind of sitting, right? And it's
Hmm.
not hitting those IRRs that are necessary to return
Right.
capital back to investors. And
Yep.
so when you think about a lot of the institutional investment, the landscape had changed entirely, especially during the pandemic. Industrial went up, obviously, and offices got absolutely slaughtered. So there was
Yep.
lack of office investment. Retail was questionable, and it actually
Yep.
started to make a little bit of a bump up. Hospitality was hit with record prices as price per key, which is kind of a way to
Yeah. Per
gauge
room.
it. Yeah,
Yep.
exactly. And so when institutional investors were looking at somewhat stable outlooks for asset classes and ways to deploy into them without having to kind of gauge a true investment thesis around it, industrial and multifamily in the residential sector really stood out. That's
Right.
why you saw Blackstone buy Tricon Residential. That's why you saw a lot of these institutional investors investing heavily in the industrial warehouse space. And so those two areas really stood out as incredible areas of opportunity in the next little bit. So that's kind of the idea there. And that's why I do think there's been a flood of supply in the residential space.